Hello and thank you for checking out another edition of our MMC Market Watch. This video a little bit different than usual. We're going to be focusing on the US election. We're going to be talking about how I think markets are positioned, how traders are positioned, what I think the charts are actually telling us about the direction and actually the outcome of the election, which might sound a bit strange. Why is it important? Well, you'll see from the chart that I have on here, I've got the daily chart of the S&P 500. I've got the gold line is gold and the purple line is the US dollar index. So they're all overlaying together. And obviously there are other factors that contribute to the movement in the direction of these markets. But if you take a close look where these blue lines are, so the last four US elections, the days of those have occurred, there's been pretty significant changes of directions across the board in these three markets. And I say there may be other factors that have also contributed to the change, but those moves have very often coincided with the election, so they've been kickstarted by the election. I won't get into too much with regards to the outcome in terms of all the different scenarios, because it'll get really confusing. There's lots of potential options. You might think of a Democrat win or a Republican win. There's the other issues, whether we have a split Congress or a Democrat Congress or a Republican Congress, and lots of different sort of outcomes and options that have impacts to different markets. Another market will have be a major impact on will be the energy market, which I won't focus in on here. I'm going to focus on these three just for the sake of time, but certainly the energy market will be a big one, simply because of the policies that both the Democrats and the Republicans have. Very, very differing policies, particularly around things like energy. But yeah, I'll not get into too much about all the different scenarios and the outcomes. I'm going to talk about what I believe the markets are currently telling us at the moment. And I'll go into detail on each of the charts, but what I currently believe is actually charts are telling me that Trump is going to win. The media is not, and all the polls aren't, and I don't actually care. I'm just, my observations of the charts are telling me that Trump is winning, he's going to win, and we're going to continue with what we currently have. So I'll talk through why that is in a second, but that's what I believe the charts are saying. As I say, I won't get into too much with regards to all the different outcomes. We're going to focus on what I think they're trying to do and how we should be positioning ourselves and what to expect as a result. I'm going to actually begin with gold to start. I'll come back to equities and the dollar index afterwards, because I think there's some really interesting patterns and setups actually in the gold market that I think will help us push through then to equities and the dollar. I'm just going to put it on the US bonds as well. I want to look at those. Really, really interesting. I'm going to start with the previous election, 2016, where it all starts to come together. If we look at gold, gold is the price action, the white the candles, white and blue candles, and the US Treasury bonds are the blue line. So we look at gold in here, you see the price action. We were consolidating through June, or July and August. September we had this breakdown, and we've seen this slow grind through October, and just before the election we peaked and started to move lower, and right after the election we accelerated right into mid-December. Look at the bonds, they were continually dragging gold lower, really underperformance. It broke to new lows sooner, it made the lower highs sooner, it didn't even retrace through October, and we continued to push lower and accelerated and dragged gold down. There is a very strong positive correlation between these markets, and there is a strong history of the bonds leading gold, both up and down. And we can see here in 2016 it was very much a case of leading it lower. Bonds dropped before gold did, and gold very much caught up with bonds. Fast forward to where we are in both these markets, and interestingly we see a very, very similar pattern. Gold again has been consolidating through that July-August period with this drop in September. We're in this slow grind at the moment, and I think we're setting up to make a peak. We may even have seen this as the sort of area I was expecting maybe to see a drop. You can see the area I'm sort of looking for gold to actually drop into. That's what I've been planning for a while. But the chart is following a very, very similar pattern to what we've seen in 2016. And I think that's what traders are preparing to be on the short side of gold and to head into this area, probably even a little bit lower, but that's my first area I'm looking for gold to move to. To support this, again, let's look at the bonds in here. Look at the bond market in here. We're massively underperforming. We're heading to new lows. We're dragging gold lower and it's continued to push lower, which I fully expect gold to catch up based on what we can see on the chart. That's what traders are preparing for, and it's what they anticipate. So if that is the case, and I say there's a really strong tell in there, I do see them moving lower. Seasonally, if you take a look at the election cycles for both markets, particularly gold, you'll see typically around this period it does underperform, gets on under pressure following the election, continues and makes a low around the middle of December, and that's exactly what we've seen in 2016. Say there's different outcomes that could impact on this, but based on what we see on the charts right now, I'm expecting this to play out as it is. And again, looking at the bonds, the drop in December and then expecting a rally afterwards, so certainly not a stronger performance in here's what we generally have. I would postpone this rally when a rally towards later in the year, and weakness here in early November just after the election. So if the gold is moving lower and bonds are moving lower, that would typically indicate a bullish move for equities and the dollar. Again, if we bring up those two markets, I think a very similar outcome to what we actually had. If the outcome is the same, I think the outcomes in terms of the markets will be very similar to what we've seen previously. And I say that looks to be what the markets are setting up for. Actually, let me turn off gold a second. We'll focus now on the S&P and the dollar. So you'll see here the S&P, we were drifting a little bit lower, and typically weakness, which I'll talk about in a second, the pattern before the election actually indicates winner or loser. But you'll see here both bottomed out together and had a strong rally just after the election. Dollars didn't follow through and actually continued to actually turn around and move lower. But it's this period we're referring to here just after the election. I do think around sort of late November into December, the dollar can actually underperform. And that's when I'd expect to see things like the euro and gold and the treasuries to rally. But the initial period after the election, as it stands at the moment, I'm looking for a dollar rally and an equity rally as well. And if you look through historically, we do make a low prior to the election. We do typically make a low. There's a big spike in here. We do typically make a low prior to the election. So fast forward to where we currently sit, and there's a big variance of where these two markets, and these markets have been negatively correlated of late, but that's not to say we can't catch up. What I'm looking for here, ideally, in terms of continuing to push to the upside, I am looking to be a buyer in here and looking for a potential rally to kick off before the election. This is not the election date, but by the way, this is a period from the 31st of September to the 31st of October, and if the market is positive through that period, there's a really strong correlation and being able to pick the winner or losers it may be, depending on how it perform. If the markets can stay above that, there's an 84% chance that the sitting president keeps their job. If the market drops below that line, it works the other 84% chance that they're going to lose their job. And if, as I said just there in 2016, we underperformed. We were moving lower. We actually did really badly through the summer, which was in line with actually sitting president losing their job, and we got Trump in. So as it stands at the moment, the market has been performing very well, strong through this period. Nice rally structure in here, looks good. The structure of the chart is bullish, and as I say, this is why I believe the markets are saying that Trump is going to keep his job. There doesn't seem to be any risk. Uncertainty isn't good in financial markets. When uncertainty involved, we tend to have fear and a bit of selling, and traders leaving the market. Seems to be very little fear. We had a little correction, but we typically get that through the summer period. But it's stayed fairly robust, and I think if we can continue to do so heading into the election, I think it's because traders are anticipating a continuation of what we have, and that would be a continuation of the same president as well. So if that is the case, say gold and bonds are showing that traders are positioning themselves to be lower just after the election. If that is the case, I'd be expecting to see equities moving higher and a short rally in the dollar index as well into around sort of the latter part of the month, maybe into December. and then for the dollar to reverse. But that early part after the election, at the moment, I'm preparing for a rally in equities and the dollar and a decline in gold and bonds. Hope that makes sense, guys. I will begin into a bit more detail on my usual webinars, obviously on Monday prior to this, and I'll also be talking about the implication maybe on gold and energy stocks on a webinar on Tuesday night as well. So by all means log in for that. I will have more time to go into a lot more detail. But as it stands at the moment, as I say, charts, particularly the equity markets, are looking very bullish. That to me is indicating that traders are not seeing the risk involved with regards to a new president and new policies, which is telling me they see Trump staying in. And that's what the charts are telling me, and that is the outcome. Equities up, dollar up, gold down, bonds down.